Welcome to the November Market Thoughts Commentary. I'm Maria Considine King, and I'm here with Simon Heslop. Simon, let's get to one of the more volatile issues that's happening right now, which is Greece. First, the referendum was on, then it was off, and now Papandreou is slated to step aside. Can you talk to us a bit about what we're seeing domestically as well as in the European markets and what we might expect to see in the month ahead?
Sure. Well, markets have definitely seen heightened volatility surrounding Greece and the rest of the Eurozone debt situation. It seems like every day there was a possibility that there would be some type of resolution, and markets were indeed volatile. In the earlier part of the month, we actually had some leak that there could be a resolution to the Greek situation, so we did see markets rally sharply, and that rally held throughout most of the month. As a result, now you've seen a resolution that banks have accepted a 50% haircut on Greek sovereign debt. And it looks like the European Central Bank is actually increasing the backstop or the contingency fund to help out banks should anything go wrong. So what we've seen now is about the best month in the Dow since 2002 and in the S&P in the last 20 years.
In your written market commentary, you talk about the risk-on, risk-off market period as a way of explaining European market gains despite the turmoil. Can you explain the concept to us and what it might mean for investors?
Yes, well, we're definitely seeing a market that's trading quite a bit on technicals. In fact, you're seeing this concept of a risk-on, risk-off trade. You see markets reach to lows, possibly overdone lows, for investors to then jump in particularly on some of the riskier assets. And then markets seem to be exaggerating on the upside as well. So investors seem to be pulling money out of the markets, again seeing this whipsaw or over-exaggeration in markets recently.
The U.S. economy surprised many with its growth in the third quarter. Do you think that we're out of the woods when it comes to recession fears?
I don't think we're out of the woods, but I think the recessionary fears have backed up considerably. In fact, we saw our third quarter GDP number come in at 2.5% annualized growth rate, which has been a lot better than the last 2 quarters. Seems to be taking the recessionary pressures off the table, but again, lots of things in the economy paint to the fact that we're going to see this slower, more muddling along situation or scenario moving forward.
Now, there are a lot of negative headlines, Simon, both domestically and abroad. Can you tell us if there are any bright spots that you see?
Well, I mean, there's a bright spot for Midwesterners. St. Louis won the World Series.
That's great.
But in markets, you've got the consumer who actually came back a little bit. Retail sales were strong. Unfortunately, this was as a result of a reduction in the savings rate. But nevertheless, you know, a good consumer could help GDP moving forward. And you've got manufacturing. The ISM data showed fairly strong manufacturing. So, you know, there's some pluses and minuses in this economy, but again, enough to show a little bit, a few bright spots out there.
And finally, Simon, are there any trends that you saw in the third quarter that you expect us to see to close out the year?
Well, I mean, I think the trends are this sense of heightened volatility. And again, a market that seems to have some technical components and a market that may indeed exaggerate on both sides. But for many investors, you've seen a confidence come back as a result of markets really pushing off and showing some good strength throughout most of the month.
Thank you, Simon.
Thanks, Maria.
And thank you for joining us for the Market Thoughts Commentary. Please join us next month.